Started here. There we go. There we go. We got Kamloops, Nebraska, Calgary. Let's go. Toronto. It's good to see everybody. See my buddy Derek. If you guys don't have your cameras on, turn your cameras on so I can see that you guys are dialed in, taking notes, and focused. But today, what I want to share with you guys, let me just pin myself here, is a couple of things, right? So obviously, you guys have heard that, we made a new partnership with Gifu, and things have been absolutely crazy and really just been blessed to, be able to work with the guys over here and, you know, being in the room in Miami just a couple of days ago and, meeting some of these individuals and seeing the results that they've had over the last several years and what they're doing now has like absolutely completely changed my mindset and my perspective on everything, right? Especially in the trading space. And especially when I saw the scanner and the different things that, they were teaching, and it was just crazy to say the least, right? So if you guys weren't there, definitely make sure to be on the next trip. It was crazy just meeting these 8-figure, 7-figure earners that have been in this industry for so long, and them just sharing their results with what they've had with trading, and just being able to learn from them and study them, ask them questions. These are the kinds of things and these are the kinds of people where you really get that jump in your growth with trading or whatever it is that we're doing, right? But what I want to share with you guys today is a little bit of something. So, who in this chat has been tuned into our amazing educator Donnie's sessions in the previous venture that we were a part of? Who was tapping into his sessions? Yep, yep, I love it. So, what's going to be happening is he's going to be an educator over here in Gifu as well. But at the moment, his content and his videos and his boot camp and everything is not on the website yet on Gifu, right? That's still being set up. So what Donnie has decided to do is, I'm going to share my screen here. You guys can see on the Revolt website, he implemented a smart money tab where you can go and still get access to all of the education that he does, right? And then for the live sessions, like Tuesday mornings, Thursday mornings, and then Sunday evenings, those will be posted in the Revolt group chats. But if you wanted to still get access to his boot camp and learn the smart money skill set, he actually has it all here on the Revolt website under the education tab, right? So at the top, if this will load here for a second. At the top, you have home, fast start, launchpad, education. You want to go under the education tab, and then you'll see the crypto, smart money, and smart money. That's where you go to learn all the different phases and all the step-by-step for his bootcamp. Right? Just wanted to clear that up. If you guys had any questions on that, it's still there for you. You can still get access to it. But if you didn't know where it was or where it is, there you go. It's on the website. You still have access to it until he has all of his education on the Gifu platform. But what I wanted to share with you guys today is I wanted to go over a little bit of market structure and just kind of for the new people that are on here, whether you're in your first couple of days, first couple of months, learning how the markets even move and understanding, why they move up and down is one of the most important things, right? If you come on here and, you have no idea what any of this means or what this chart is, right? You might think it looks like a heartbeat monitor or whatever, right? That's what I thought when I first got started. But the most important thing is understanding how or where the market is going, right? Is it going up? Is it going down? When do I sell? When do I buy? Right? And that's what I want to talk to you guys about today. So with understanding market structure, right, what we really want to look for is a different, like a pattern in the market, right? So the market might start down here, and then it might move up, and then it might move like this, right? You might get something like that, right? But if you don't understand what that is, it's probably confusing, right? But market structure, you want to look for really four main points, right? You want to look for, if it's an uptrend, you want to look for the low, right? Before the market started moving up. And then you want to see the market retrace, right? You want to see it come down. And then from there, let's say it went down to there, you want to see the market break above and create a new high, right? And this low that we created off of this first high, you don't want this low to be lower than the first low, right? And how that works is here we have our lower low, right? That's where we started in the uptrend. That's our lowest low before the market started moving up. And then over here we have our higher high, right? Because the market moved up and it created a new high. Then our third point is that retracement level, right? Where the market made this high and then moved down. That is now our higher low, right? Because this low is higher than this low, right? It's very key to noticing that the market is made a higher low rather than a lower low, right? Because you're looking for market structure, you want the market to move to certain points, right? And create that consistent pattern, right? So from here, once it's created that higher low, our fourth point that we would look for is our second higher high, right? And it would be the same thing if we did this the opposite way, right? If we were looking for a sell, maybe it's something like that. In this case, we have our higher high, right? The highest point that the market was at before we started moving lower. Then what we have here is our lower low, right? Because the market created a lower low than this high was. Then we want to see the market retrace, right? And come higher and give us a lower high, right? So these are key terms to, if you're taking notes, to write down the higher highs, lower lows, lower highs, and higher lows, because they're different depending on which way the market is moving, right? If the market is moving up, you'll have higher highs and higher lows. If it's moving down, you'll have lower lows and lower highs. And then obviously here, the last point, we would have our lower low, right? Then in order for the market to be moving in a consistent trend, whether that's trending up, as we see here on the left side, or trending down, like we see on the right side, you want to make sure that using the Fibonacci tool, which I'll show you guys here, you want to make sure that the market has made at least a 50% retracement, right? Before moving higher and making that higher high. If it did not make a 50% retracement, it is actually not considered a retracement. It's just a continuation, right? Let's say the market moved just a little bit lower and then went higher. This would not be considered our higher low, right? Is it a high, or is it a higher low than this low? It is, but in order to see the market moving consistently, you want to also have consistency in the waves, right? Or in the trends that the market creates. So in that case, you want at least 50% retracement before it moves higher. And then what we do from that first point, right? We had point A, or point number one, which is our lower low. Point two is our higher high. Point three is our higher low, which was a 50% minimum retracement. Now our higher high, that's where we want to find our next possible entry, right? And all of this you want to do on the higher time frames, like the 4 hour time frame or the 1 hour time frame. That's where I like to, see, is the market moving consistently? Because the more you zoom out, the more you can kind of see what the market's really wanting to do, right? Because if you're on the 1 minute time frame, for example, um, the market might be moving like this and making these higher lows and higher highs, but it's going to be a lot smaller of a time frame because overall the market is moving higher on the big time frame, but the smaller time frame, you're not going to actually be able to see what the market is doing, right? This it might drop like that or go like crazy higher. It's doing a lot of different things on the smaller time frame. So that's why it's better to zoom out and look at the bigger picture. Like, what is the market doing consistently over a longer period of time rather than a short period of time, right? That's how you find market structure on the bigger time frames. And then from there, in order to find an entry point, right? Because these 4 points, you want to use those just to find your market structure, right? To see, is the market going higher or is the market going lower consistently, right? So in order to find your entry, right, what you do is from your higher low, not the lower low, the higher low, the second low that it created, you want to drag your fib to the top of your second higher high. And now we want to wait for a retracement into one of these areas, right? Under 50%, 50% minimum every single time, right? So you want to see the market come down into here, and then we would have the possibility of taking an entry, right? So until you understand and you know where the market is going to, you don't want to be entering a trade, right? If you can see that the market is consistently going higher and higher and higher, you have a better outlook of what the market is doing. But if the market is just starting to create that uptrend or just starting to create that downtrend, you want to look for these 4 points in the market to identify, is it going higher consistently or is it going lower consistently, right? Because otherwise, you're just pressing buttons on your phone and hoping the market goes in your direction, right? These are things that you can do and things you can learn to give you an edge in the market, right? Because if the market is consistently going higher, why are we trying to sell to make money? The market's telling you that I'm consistently going higher, right? So a key example of that is, actually, before I get into that, I'll show you guys the settings here for the Fibonacci so you guys can set this up. If you guys want to take a picture or a screenshot if you're on your phone, these are the levels that I have entered for the Fib that, kind of takes the all the extra stuff away from it, right? You have your starting point, you have the top of your retrace or the top of your fib, right? And then your retracement levels. 50% minimum, 618, 716, and 786. That's called our kill zone, right? That's where we prefer to take entries out of, is those three purple areas that I have. You can make it whatever color you want, right? It doesn't really matter as long as you understand what those are for, right? 50% is minimum before you take an entry. 618, 786, or 716 and 786, which I will circle here for you guys. This area right here, that's our kill zone. That's where we prefer to take entries out of. And then our 886, right? 0.886, that's like our Black Friday discount, right? We don't really get it too often, but usually if it retraces that deep, that's like the best possible entry that we can get, right? Otherwise, if it's retracing that deep, maybe the market's going to move the opposite way. But, sometimes you can get a really good entry, and that's the best entry that you could possibly get, right? But 618, 716, 786, that's where the magic happens. That's where we prefer to take our entries out of, right? And then for the fib as well, if you're taking buys, right, or looking to buy the market, we drag it from the left side of our screen to the top right of our screen, right? And line it up with the top of that high. And if you're selling the market, right, let's say we have our lower low here, and then we have our higher low or our lower high, you want to move the fib from the top left to the bottom right. That's how you extend your fib, right? So buys, bottom left to the top right, sells, top left to the bottom right. And then you can see we want the market to retrace up here into these areas. In this case, we want the market to retrace down, right? Hopefully that clears that up. But let's take this to the charts, right? in this case, right now, gold, we broke down. We had these highs that we created, these higher highs, right? We created new all-time highs. So there's nothing really else to go off of other than those highs. So that's the highest point that the market gave us, right? In this case, we're on the 4-hour time frame, right? We have our high here, and then we retraced down and made a low, right? The market moved down, we created a low. So this would be, in this case, our higher high. And in this case, this would be our lower low, right? For the sell example that we had. Now, what the market has done is we pushed higher, right? We created a low, and then the market reacted off of that low and pushed higher. So can somebody drop in the chat, what is this area at the moment called? Is it a higher high? Is it a lower low? A lower high? A higher low? What do you guys think that would be called? A lower high. Exactly, a lower high. Why is it a lower high? Because this high that we just created is not higher than this one, right? So that's our lower low. Then what do we look for, right? We pull our fib from the top to the bottom. Did we get at least 50% retracement? Yes, we did. All right, you can see clearly from that drop, we moved up. 50% was here. We're actually in that kill zone area right now, right? The 618, 716, 786. And now what we want to wait for the market to do to see if we're going to consistently keep going down or try and figure out what the market is doing. We want to see it come and break lower than this low, right? Because at the moment we have, all-time highs that we made previously last week, and the market could just continue higher, or we go lower and then we create proper market structure and we kind of figure out, okay, the market is going to go lower for a period of time, right? So on the bigger time frames, this is where you can figure out how market structure works and which way the market is actually trending, right? The trend is your friend. Like, look at this example back here. Since December 24th, we created lows down here on gold. The whole time we just been trending up and down. I actually did a training on this earlier when gold was in these areas, right? But every single time it moved higher and created higher highs, we always retraced at least 50% and then kept moving higher, right? This is why it's so important to figure out which way the market is going, because if you understood market structure, you could have rode this whole wave and just kept getting entries off of these retracement areas, right? Because you can see that gold is consistently moving higher. And then at some point, we had an all-time high here and it just kept going, just kept giving us proper market structure, 50% retracements, moving higher, right? That's what you want to look for is the market consistently trending in a certain direction, right? So at the moment, we're just kind of waiting to see what will happen with gold on the bigger time frames to identify if it's gonna go in a downtrend and consistently go down, or if it's gonna continue higher, right? We're kind of in that waiting period, but that is how you do market structure, identify which way the market is moving, right? Hopefully that clears that up for some new individuals in here. But what I'm most excited to share with you guys today is actually the new scanner that we have with Jifu. And it's crazy. Who is there some people on here that were in Miami with us? There's a couple of you guys on here. Drop some twos in the chat if you guys made some money with the scanner while we were out there in Miami. Derek did, Olivia did. There's definitely a lot of us that that made some money there. It was crazy, right? But obviously with every scanner, right? I'm not going to tell you that the scanner is 100% accurate. We're going to make a ton of money because the scanner doesn't miss. You still have to use proper risk management, like we talked about in one of the previous sessions with the scanner. If you don't use proper risk management, you might have the possibility of losing your account, right? You want to always be smart with the trades that you're taking and always use proper risk management and stick to the certain dollar amount or the percentage amount that you're risking every single trade. Because if you go over that, right, just because the scanner called out a trade, it doesn't mean that the scanner is actually going to hit that trade and be profitable, right? Just because a scanner or an educator tells you to take a trade doesn't mean that you can go away from your normal plan that you would normally take in the markets, right? Just wanted to clear that up. I'm not here to tell you guys to go crazy on the scanner and do the big lot sizes and make a bunch of money. Still be consistent with the amount of money that you have in your account, whether that's on a demo account, you still want to stay consistent, whether that's your own live account or you have a funded account, still be consistent with what you're risking and how much money you have to lose and how much money you are going to make if when it hits your take profit, right? But how the scanner works, right, is as you can see here, it actually did just call out a trade idea and it gives you your stop loss, your take profit, and your zone of action, which is your entry zone. And what it will do is at the moment, we actually have a yellow box here. And how the yellow box works is when the market is moving a certain way, the market will call out and show you a gray box first, right? Which is a potential area to buy or sell. And then what you want to wait for after that gray box has been created, you want to wait to see what the market's going to do, right? Is the market going to go higher and play above that box, or is the market going to go lower and play below that box? And then once the market closes below or closes above, right? If we had a green candle here that closed higher than this, the market or the scanner would have called out a different kind of trade, would have called out a buy, right? But in this case, the market closed below, right? You can see that this candle here closed below this zone, right? Everybody can see that right here. Let me just, this whole candle body is closed below that zone, right? So how that works now is since we got a closure below that zone, right, the zone of action that we have here, what we want to wait for is a retracement back into this box, into this zone, right, our entry area. And then here, this is where we want to take our entries for sells, and then here we have our take profit levels, right? So it's very, very simple. The market will give you a gray zone, a gray box, and until that box is yellow, right, it's not active. So if it's gray, the zone is not active yet. If it's yellow, that means you're waiting for a retracement into the box. And how you know that the box is ready or the zone is ready for you to take an entry out of it is this yellow check mark right here, right? Once you see this yellow check mark, once the zone here, the box is also yellow, that means we're ready to take an entry off of this area, right? If you don't see those things happen, probably don't want to take an entry, right? Because it's not ready yet. So that's one major key thing is understanding when the zone is actually ready and when it's not, right? Then after you've entered in here, right, you have your stop loss, your take profit areas, very easy to use. What you want to do then is, or after you already entered the market, or after the trade hits either take profit or stop loss, it will actually pop up with a flag. And if you see the flag on your screen, that means that the trade is actually finished, right? So don't wait for the market to come back into the zone and look for another trade because the flag will actually mark that the trade is done, right? Now we wait for the new zone to pop up. And with the scanner as well, what I found most effective is using it on the 5-minute time frame, right? And a key thing to note is that we are scalping the market in this case, right? We have a 15 pip stop loss that the market gives you and a 15 pip take profit one, and then a 30 pip take profit number two, right? Or exit point. So that's very key to note is that whatever your entry is, you want to have a 15 pips stop loss and a 15 pip take profit, right? Because sometimes you won't get exactly that entry of 2924.5 that we have here. So in that case, let's say you entered at 25, you want to adjust your stop loss so that you have a 15 pip stop loss, right? So in this case, it would not be 29.26. Your stop loss would be a little bit higher at 29.26.5. Does that make sense? Can it be used for higher time frames? It can be used for higher time frames. You can see that in this case, we also just got a zone on the 30 minute that was there. We have a zone on the 5 minute that was also, or the 1 minute that was called out. The hour time frame is here. We actually have a buy zone down here because the market broke above, right? And that's another thing to note is wherever this check mark is, that means that we're going to be looking for buys or sells. So if the check mark is above the market, right, we have a green candle that closed outside of that zone with a check mark above it. That means we're waiting for the market to come down to enter buys off of this trade that the scanner called out. Right on the 5 minute, we have the opposite. We have a candle that closed below the zone here, the zone of action, with the yellow check mark below. That means we're waiting for the market to come higher to then take sells off of this. Does that make sense? Hopefully that kind of cleared it up. And you can use it on higher time frames. You can kind of go in and see different areas. Like let's say you want to do the 15 minute. It will still give you areas on all time frames, right? Well, you have to wait until the areas pop up. But a key thing to note is that for me personally, I've just been strictly using this on the 5 minute time frame. And while we were in Miami, I made 90% on my account just using the 5 minute time frame and using the scanner. Right. It was about, I think we took about 25 trades with the scanner over the 5 days that um, we had access to it. And I think we lost 7 and won 18 trades. Right. It's not going to hit every single time. That's why you have to use proper risk management. Right. Just because we won 18 out of 25 trades last week doesn't mean we're going to win 18 out of 25 trades this week. Right. You still have to be and use, proper judgment and stick to your trading plan, and risk exactly how much you want to risk, right? Every single trade, because if you just, do bigger trades just because I made 90% last week, it doesn't mean that you're going to make 90% this week. And also doesn't mean that I'm going to make 90% this week, right? That was just last week's results, right? Past profits don't guarantee future results, and you still have to use that proper judgment with everything that you do, whether it's a scanner or callouts, right? Like I said in the beginning. But for me, it's worked best on the 5 minute time frame. And then um, yeah, obviously figuring out what is the market doing on the higher time frames as well. At the moment we can see higher time frames is calling out sells. The 1 hour we're calling out buys from this area, right? 1 minute also called out sells. So you kind of have to judge and kind of look at different time frames and see what's going on, right? But 5 minute is the one where I've had the most success, right? Obviously seeing what the market is doing on higher time frames, and then also making sure you understand what the market is doing, right? Because if there's a news event that's happening and you're trying to find a trade on the scanner, right, you might not have the success that you want to see with that trade, right? Because with news, we all know that when the market has a high volatility, there's a lot of money moving in the market, that crazy things can happen. So you have to use proper judgment. But yeah, the 5 minute has definitely worked the best for me on this in this case. Um, we had a couple of amazing trades. I know there was one, and what you can do as well. Something that I did is, if you see exit one and exit two, I actually trade smart money as well. And what I did is I actually combined one of my smart money entries that I was looking at with the scanner, and we actually caught a beautiful trade, right? Because I was looking at the bigger picture, right? Figuring out what was gold wanting to do in this area. And then the scanner called out an entry zone on there as well, which was also tied into my entry zone with smart money. And then I actually extended my stop loss or my take profit, not my stop loss. I extended my take profit. And we actually ended up catching 150 pips on that trade, right? Which is something you can also do. But what I recommend is 5 minute time frame, right? Wait for the gray box to turn into a yellow box with a check mark for a confirmation, giving you a sell idea or a buy idea. And then once it hits take profit one, what I did with that other trade was I had one trade marked at take profit one, and the other trade I had marked at it was like 150 pip take profit, which is what was another zone I was looking at. And then I took my stop loss and moved it into profit after this trade had already hit take profit on the first entry that I had. Right. So that's something that I recommend doing for you guys as well is taking two entries on your trades that you take. Right. So if you take, let's say we took this trade right now, um, and we had a short position. Right, you can mark this up here using this as well, just so you can kind of see. We had the first entry was at, or the first entry we took profits at exit one. And then the second one that we had, right, we still had the same entry, but my take profit instead of exit two, it was a little bit deeper down. Let's say it was something like that, right, with stop loss the same. What you can do is you can adjust your take profit, right? If you see that with another strategy or something that you're looking at in the market, you see it, potentially going to a certain area, right? You can adjust your take profit. And then once this first trade hits take profit one and you're closed out, you already have profits secured, right? We can take that away. You still have the second trade, but now what you can do is you take your stop loss, put it into break even or even into profit, right? I usually like to do like 5 pips into profit. And then no matter what happens, you're still making money on that trade, right? The first trade, you got closed out, you made your profit. Second trade, your stop loss is now here. And let's say the market is moving. Let's say the market was moving like this and then went like that, maybe something like that, right? Even if the market came up and broke you out and your stop loss here, you still made profits, right? Rather than having your stop loss up here, your entry was here, and then you lost money on that trade. As soon as it hits exit number one, you move your second trade that you have for that same trade into profit, your stop loss, right? Then you have no risk. You can sleep easy, go to work, whatever it is that you're doing, and you don't have to worry about losing money because your stop loss is actually in profit. Hopefully that makes sense for you guys. Um, but yeah, does anybody have any questions on anything with the scanner, or you want me to clarify? If you guys have any questions, drop them in the chat box. Like I said, this is something that you probably want to use on a demo account just to try it out and get the reps in at first, and use it, see how it works, figure out, for you what your plan of action is with the trades that it calls out. Right? Because sometimes you probably don't want to use every single trade, right? Somebody asked, what would you rate the scanner out of 10? I would say it's a 10 out of 10 scanner. You know, all scanners have flaws, and stop losses will get hit every once in a while. But if you use it properly, there's no way that you lose money in the long run if you use proper risk management. Which style do you suggest the most? I've been looking at just golden era. So yeah, with that being said as well, on the right side here, this is the golden era scanner, right? So there's a bunch of other different scanners, But this one is golden era, and this only works with gold when you trade gold, right? It doesn't work with trading Bitcoin or any other things because it goes off of these levels, right? Like every 10 pips or every 50, every what is that? Every 50 or every 100 pips is a level on gold, right? So we have 29.30, 50 pips from there is 29.35, then 29.40. What you can see with the scanner too is if you actually zoom out a little bit, it bounces off of these areas quite often, right? Or it stays in between these areas. So here, for example, when we had this low that was created at 28.95, right? It bounced off of that 28.95 area. Then from there, where did it go? Right? We bounced up, we broke above the 2900 zone, and off of the 2905, we actually reacted and went back lower. Then you can see the wick here, we reacted off of 28 or 2900, and then we moved higher. Right here, 2915, we just broke through all these areas. 2915 hit, we kind of came to a halt, bounced off, went to 2910. Right? Then we broke above, wicked off of 29.20, played lower, 29.15. You kind of get the gist of it. It bounces off of these key levels, and that's where the scanner calls out these trades, is off of these areas that it bounces off, right? So here was 29.25. That's where the scanner called out a trade, was off of this level. What's been the win rate so far? Um, I mean, I don't really know the math on that, so I got to pull out the calculator. Um, but in Miami, we had 25 trades that we took, and 18 of them were winning trades. And then today I took four more trades that were all winning trades, so 29 trades in total. And then how many winning trades is that? 18 plus 4. Let's see here. 22 divided by 29. Right now, we're sitting at a 76% win rate with the trades that I've personally taken, right? Obviously, there's other trades that have been called out, while I've been traveling and different things like that while on calls. But with the trades that I've personally taken so far, it has a 76% win rate, right? And just last week, we made 90%. Use proper risk, and that scanner would do some damage for sure. 100%. Everything comes down to risk, right? Everything comes down to risk. Do you have proper risk management in place? Do you know how much you're risking per trade, right? Do you know what your account balance is at and how much you're actually wanting to risk? If it's, $50 or $20, $100, if it's 2% or 1%, right? You have to figure these things out before you get into the trades, right? Not just pressing the buttons just because the scanner called out a zone, right? You have to make sure that everything aligns with your trading as well, and then use it to your advantage, right? Wait for it to react off of these areas, right? Like here, you can see at the moment we are reacting off of this area, right? I was hoping we would get a trade on this call, but looks like gold is actually taking its sweet time. But as you can see, we still haven't hit the exit number one. So this is still an active zone, right? Until it hits exit one and then two or it hits stop loss, even if it hasn't retraced, it'll just call the trade as done. You'll see the flag pop up. And then from there, we just wait for the next zone to open, right? Sometimes it takes a while, sometimes it's pretty instant, but usually, if you see a gray zone, you wait for it to be yellow. You wait for either a break below, actually a close below, a candle that closes below the zone, which you can see here, or a candle that closes above the zone. And then if it's a green candle closed above, we're waiting for a buy with a retracement into the zone. If we see a red candle close below, we're waiting for a retracement into the zone for a sell. Right. And then always make sure you have proper risk management. But yeah, that's what I wanted to share with you guys today. It's something that I saw one of the guys in Miami that was showing the scanner to everybody, and one of the guys he went crazy with it. He made like $1,100 on his live account, and just like 2 days just by using the call outs from the scanner. Right? It was it was crazy. He paid for his whole Miami trip just using the scanner in a couple of days. And it it works. Does it have a crazy 100% win rate? No. Can you make money off of it if you use proper risk management? 100% you can. All right. But with that being said, guys, I hope you guys all have a blessed rest of your night. Stay safe out there in these markets and make sure you always stick to your trading plan. You can really use this thing to your advantage if you use it the right way. If you guys have any other questions, message me on Telegram or on Instagram, and I'll be sure to help you guys out and make sure you guys are all using it properly, making money, and you guys know exactly what it is that you're doing. But with that being said, guys, I hope you guys all have a great night, and I'll see you guys next Wednesday.